Welcome to Berkeley ME CPA video series. Today we are going to discuss our 9th lecture for CPA. Broadly we are going to discuss our units 17 and 18. Topic names are quality consideration and benchmarking, along with responsibility accounting and certain other topics we are going to discuss. Broadly these are the things we have to learn: quality management and cost of quality, measure of quality and tools for quality analysis, benchmarking, total quality management, ISO framework. In the second portion, we will discuss the responsibility accounting, allocation of common cost, transfer pricing, theory of constraint, performance management, and the balance scorecard. And in the last portion, we are going to discuss in detail the project. Now let's come in the production environment, where we have dyeing department, finishing department, polishing department, packaging department. A lot of departments are there. So one department, you make him responsible for his cost. If you make him responsible for only cost, this will be a cost center. If you will make him responsible for cost and income, revenue, so it will be a profit center. Because what is profit? Profit is income minus cost. Or if you make him only responsible for revenue, then this will be a revenue center. Or if you say him, you are responsible for cost, you are responsible for income, you are responsible for the investment that required to make your department. So this will be an investment center. So we will discuss the responsibility centers, and this is everywhere now in the banks also. This is another name is SBU, Strategic Business Units. You make a strategic business unit, there is a head of this unit there are so many sub-units, they sit together at one place and they have a manager and the general manager whom they are reporting. This is the authority structure. If you want to understand more, you can see it in a family environment. Suppose you have 3 kids and you make these 3 kids responsible for themselves. You say he is a big son, he will earn himself and he will make his cost. So he is a simple profit center. Now he is by his own, you need not to worry. Now you have a small kid, that kid is only a cost center because he cannot earn something, so obviously you have to take care of his cost. Right? And you can make your husband as investment center. Means he is responsible for cost, revenues, and the investment to bring this home into a contribution and segment reporting. Contribution is an accounting term. It even is a cost accounting term, which is equal to selling price minus variable cost. So why we study this contribution reporting is because we have 2 types of cost. One is fixed cost, one is variable cost. If we take the fixed cost and variable cost total, so it will be the absorption costing, and it will not help us to take the strong decisions. For variable costing, because it clearly tells if we do this activity, this is the cost, this is the direct material labor that we incur, so we can decide about it. For example, if you come here through this institute, you have some fuel cost, that is a variable cost. You can examine by your own. If you go to somewhere, knowledge village, or if you are living there, or if you are coming from, say, this side, so you have to calculate your fuel cost. If the cost to come here is more and to go to some other institute is less, quickly you can take the decision because you are considering only the variable cost. As much the car you will run, as much fuel will be consumed. So the variable cost is a cost which has direct relation with the production. As much you run the car, as much fuel will be consumed. But if you include the cost of your car inside, you will not reach somewhere. This car is for the grocery, this is for going to office, this is going to this, kids school, this, hospital, emergency. So you cannot see how, you cannot divide your car into some meaningful way. So if you see only the variable cost, you can calculate. So that's why for decision making, it's always recommended to go for variable costing, which is another name as contribution costing. What is contribution? Selling price minus variable cost. Segment reporting. Segment is the department or a function of a company. Suppose we have a departmental store, its name is Sharaf DG. We have electronics department, we have mobile section, we have the Xbox, PlayStations. This is all departments, or we can call them as segments. So as an owner, we should know that which segment is making how much money for us. If we will see the revenue of total, so it will not lead us something. For example, if there is a family, husband also earns, son also earns, the daughters also earn, and they mix it in one box. This is 100,000 dirhams per month. Now who earns what, no one knows. But if you know, okay, this guy earns 40, this earns 10, this earns 5, so you can focus on the 5. Why you earn 5? Your brother is earning 40. What is the deficiency in you? You know, this is how we can start thinking on the process. Same in the companies. We have a big store. A lot of people come, they buy the grocery, the eggs, the bread. This is the biggest revenue. But no one buys the pressure cookers, the micro ovens. What is the bad sector? Because this is also a necessity. Why people are not buying? Because then you will go in the details, deep decision. But first of all, you should have a clear indication. You should have a sale micro ovens, you have sale of the electronics, you have sale of jewelry department. So at the end of the day, owner can focus on the area. Maybe you discard the micro oven sections. If no one is coming, don't spend the money on that. Let's focus on our core product. This is how big companies does. If Head and Shoulder is moving well all over the world, then let's focus on Head and Shoulder. Now there is one Head and Shoulder, next time it will be 3 different Head and Shoulder with green, with leaf, with this olive, with this, This is how you think. First you were thinking, it's like a student who is thinking to do CMA, CPA, CFA, CIA, all. So at the end of the day, he cannot do anything. But if someone is saying, okay, I want to do CMA, this is the right place, this is the right time, this is the right opportunity, this is the right effort I need, okay, let's go ahead with this. So you will reach to a destination. If you will look around here and there, you will not reach any place. This is how the companies also think. If their one product is doing successful, they can put more research into it. Common cost, we will learn based on our understanding. Certain costs are common in the organizations, and which is because of the one process. And at one point they reach to a split off point where every cost become identifiable. But what is a common cost, split off point, and this we will discuss here also. This is already discussed in Unit 3 and 4 as well. Transfer pricing is if you give responsibility to anyone, so he will become active. He will start thinking in his expense and income. Suppose if you get money from your parents, they always has a complaint, you don't care. Generally all husbands has this complaint that my wife don't care for the money. Why is so? Because of this transfer pricing and responsibility centers. This is, I will link it now. How it is, when you have your money, the money that you earn by your own has other feelings than the money earned by someone. This is natural. That's why in organizations, now they say, okay, make him responsible for his income and expense. So let him a profit center. So if you say your husband, okay, you will earn yourself, you will spend yourself. So you are a profit center. Now there is no fighting, it's all a husband says to a wife, you are a profit center. You will earn yourself, you will spend yourself. So 60% issues will be sold out. This is, I'm not saying as a generic rule, just my focus is to explain it. I need to give you a domestic example and a corporate example. So both ways you should be very clear. Now, same way the company, suppose if it is a sales department. Sales department want to have an exhibition in trade center which will cost us 500,000. Now the financial controller or the CFO, when it will come for him to approval, he will ask, why is it so? One day you are going to spend, you hire 10 employees, same value, and give him 1 year salary, and they will bring more salary. It's a logic. Who is right, wrong? This is not our concern. But these are the discussions generally we do in the companies when the budget is, nowadays budgeting is there. So we have to approve. Sales will send us their own budget. Marketing people guy will send own budget. Production guys, we need new machinery, we need this. So you have to be very updated in terms of your approach, flexibility, integration should be there. Which will come from budgeting unit, of course, when we will discuss. You will know that if you are going to produce something, it's purely on the sale forecast. So there is a cohesiveness in all the organization. And that's why organization by definition is a group of people having common objective. So organization is not like this, that manager finance don't talk with manager marketing. If it is, then it is not an organization. And you will certainly see the bad consequences of these kind of inter-conflict between the organizations. That's why a lot of HR spend a lot of time on motivation, leadership, time management, stress management. Suppose you are a good person, but because of the hectic schedules and the family politics and a lot of things, you become stuck. You start behaving in a wrong way. In fact, you are not a wrong person, but sometimes you get too much depressed, or you can say your motivation level goes so down that you start behaving in a way which is you are not supposed to, or which is not reflecting to your personality. Same way in the company. You ask something from your general manager, he refused. One guy left, one guy is your subordinate, is threatening you for something, and you are taking all the pressures in your mind, you are getting demotivated. Now it's very difficult to go office. Sitting in office is a painful thing. You are saying, let's find another job, leave this office is this. The company you are dying to join. After 6 months, you start feeling that this will cause of your death. Right? This is the normal phenomenon. Why it happens? This is because this concept is not in the mind. But if someone having the mind that you are a responsibility center, you have to earn yourself, you have to sell yourself, you have to make your own money, and you are not dependent on anyone. So you are a complete entity, even you are in different. And financial measures, how to see the financial performance of the company. This is what we will learn. There is one ratio, ROI, that is return on investment. But every owner should want to see that what investment he has made in the company, what is the return on that.